Monday, 23 September. Critical price points as usual. This is the weekly chart. We divide this wick up in quadrants. The high of the day was the 75%. The low of the day was somewhere in here. This was our target. I forgot to date this, but this was 26th of August. This high, that was the 26th of August. So then we are in the daily chart. We see previous day high, which was continuously repeatedly used price point. We didn't trade down to the consequent encouragement of that daily wick, previous day daily wick. Also, we left a immediate rebalance, so I am bullish for the rest of the week. For now, I cannot really tell for sure, but for now. Then we formed this new week opening gap of Monday, 23 September. As you can see, bodies are respecting that. We trade into that multiple times. These are the price points annotated, the most significant price points on the 4-hour chart. Then, this was the weekly close, which is, of course, the new week opening gap low. And over the high of that, we have the midpoint of that, which is used in the 1-minute chart later on. Then we drop down to the 1-hour chart. We immediately see the price points annotated once again. If we take that away, then we see this fair value gap in here, the consequent encouragement of the weekly wick. We see that's being used as resistance, which was also the low of that fair value gap. So this is a high significant point. We draw it up in quadrants. We see we don't trade up to the 75% range of that. We trade to the midpoint of that, then drop lower to trade down to the new week opening gap. The 50-minute chart looks very clean. The 50-minute chart is very disgusting. As you can see in here, this was a 9:30 opening here. We have a muddy price action. We come down, we drop, we rally up to here, not even entering the low of the fair value gap. We do trade to the order block of that. We drop down. We do trade to this order block. And that's essentially the range of today, which is, we don't trade this today. So as you can see, the entry models in here, this was 9:30 opening. As you can see, we leave a lot of sell side. We touch buy side a little bit, and we essentially leave sell side open for the majority of the time. And we have 1, 2, 3, and then the 4th time we drop lower. Then we have the 11 a.m., which is London close. Then we drop higher again, attempting to take this out, enter in the 50-minute fair value gap. Instead, it leaves relative equals highs. And then we drop down, back in the new week opening gap of Monday, 23 September. We use some points as resistance, and I will clearly explain what happened today. So with a muddy price action like that in the AM session, it's preferably to trade the PM session than the PM session. This is the trade that I took. As you can see, this fair value gap of Thursday was being respected. We drop into the new day opening gap. The bodies respect that. Then we inverse this fair value gap. We trade all the way back in here. I entered on this low, and I pyramided on here. I had 2 contracts. This was a paper trading account, by the way, because I don't want to be associated to that. To take out this buy side, I took a partial in this buy side, and I took a partial in the new day opening gap high. Threw out my stop loss in here. When I took out this, immediately went down to my stop loss, but I was out to trade already. So this is the price delivery. Once again, the 50-minute chart very clean. Once again, the 50-minute chart very disgusting. So what do? We immediately drop down to the 1-minute chart so I can explain it differently. At 9:30 opening price, we have a opening range gap of 70 handles, which is a nice opening gap. So we immediately drop down to the midpoint of that, close to that, which is this. While doing so, we leave the first fair value gap at 9:34. We trade up to that, then we trade down to that. We are showing no inefficiencies, so we cannot base a trade upon that. We cannot short this because it's just very disgusting. Then we trade up higher. We take out the sell side. We leave an inefficiency in here. We trade lower. We disrupt all these inefficiencies. We have volume imbalance. Then we meander around a little bit, as you can see. We are taken out again. then we meander around, taken up, taken down, taken up, taken down, and as you can see, it gets clearer and clearer every time we move further down the long in time. Then we take out the sell side. We need to wait for 950. We can see that we trade up down in here. We leave a fair value gap, so we leave that with speed. We inverse this fair value gap. While we do so, we trade back up. That's not very good to see. So we trade back up. As you can see, the bodies are respecting this fair value gap, and we trade up into a high point of resistance based off the weekly chart. So we finally break down. The moment it breaks down, that's when I'm interested. When we break down, we do that with momentum. We have a breakaway gap in this price action part, in this price action part. So we measure this wick, the consequent encouragement of that. Once we trade back into that, we trade lower to take a profit in here, potentially take down all of this relative equal lows. What happened is that we trade down to the first percentage fair value gap of Friday 20 September. We leave a low in here, a low in here. Then we trade up. We inverse this price action part in here. As you can see, we are respecting them in this moment of time. We are respecting the new day opening gap midpoint of that. We trade down in the inverse fair value gap, which is a good thing. Then we trade up. We leave a fair value gap again. We trade down into this order block, fill up this entire fair value gap. Then we leave with momentum. We have a breakaway gap finally. We measure this wick, the consequent encouragement of that. Once it trades down in that, we can possibly take out this potential high with a partial here and a partial here. From this moment on, it became very, 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 very much better. The price action, it became much more clearer to me than this. So from here, I didn't take this trade, but I was happy to see that it was getting clearer now. As you can see, is at 11:50, we inverse this fair value gap with momentum. We leave a fair value gap in here. As you can see, we take this part with it because there was a volume imbalance included with that. The consequent encouragement, once again, we treat that as a point of resistance. We trade up into that. We can short that. After a couple of minutes, 1, 2, 3, 4, 5, 6, 7, 8 minutes, we finally break down. We leave a breakaway gap. This breakaway gap in here, as you can see, this is not a breakaway gap. Excuse me. We have a fair value gap with this candle's high and this candle's low, but we include this because there's a volume imbalance with it. So we draw that lower, and then we can enter on a short position in here to take out these relative equal lows and trade down to the new day opening gap, the midpoint of that, and then we move to the PM session. This is lunch. This is where we are still in the trade. We engineer liquidity in here. We leave relative equal lows. Sell side keeps getting engaged. At the end, at 1 p.m. we see that we start to respect the consequent encouragement of the new week opening gap. We also respect the midpoint of Thursday 19 September. We rally up. We close above the Friday 20 September price point. But we are only interested from 150 till 210 fourth. But in here, prior to that, I was interested also. So we trade up into this. We take out the buy side in here. We trade up. Then we trade down. We take out the sell side once more. Once we trade up and we inverse this value gap, my eyes open. So price rallies up. I will see inefficiency in here. This is where I entered. As you can see, the entire value gap got rebalanced and traded down to the order block. There's also, forgot to mention that we respect the 50-minute order block of that. Once again, we come back to the trade. So we drop down to the inverse of a fair value gap, the midpoint of that. Not only the bodies, but the wicks also respect that. We trade up. We live in another inverse of a value gap. We trade up again, and we just take out the buy side, the lunch macro, and then we meander back and forward for the rest of the day. So this was a very disgusting price action, and I'll do my emotional journals and everything in private. So thank you for listening.